Hello traders and welcome to another video review. Today is Tuesday, March 3rd, 2026. Let's take a look what do we have on the economic calendar for today. So, data that I will choose to show you guys are medium important and high important. Let's take a look at the high important first. Plenty of it. Here, not too many, so let's just add the medium important data as well. So, jobs applications ratio in Japan down from 1.20 to 1.18 and capital spending up from 2.9 to 6.5. Building approvals in Australia down to minus 7.2, which is way below the forecast of 5.4%. Current account extends to minus 21 billion. Australian dollar. CPI in Turkey 2.96, almost in line with the forecast of 3%. We are waiting for the major data release from the Eurozone. CPI and core CPI data are scheduled for release at 11 o'clock. The market participants expect the CPI to hit the level of 1.7% as month before. Spring forecast statement from the UK is scheduled for use at 11 o'clock as well, and spring statement is scheduled for use at 1:30. FOMC member Williams will give a speech 5 to 4. At 4 o'clock we got global daily trade price index from New Zealand. At 5:45 we got FOMC member Kashkari to give a speech, and then at the end of the day we got API weekly crude oil stock data release at 10:30, and 30 minutes later AIG manufacturing index. So not really busy day, nevertheless geopolitical situation is quite tense. So without any further ado, let's switch to the charts. We start with euro dollar. Euro dollar for our time frame chart is showing risk of behavior as the euro dollar sinks towards 1.1637. So as I said, this situation here is something completely different than the typical movement, corrective movement to the downside after this five-wave impulsive structure to the upside was built. This situation here is way more important. Now we got this movement to the downside after the failed breakout above the level of 50 occurred on a daily time frame chart. Right now on a daily RSI is 34 points. As you can see, we are even below the daily 100 periods moving average, way below the 100 periods moving average on 4-hour time frame chart. Next target is swing low from the January 19th 1.1578, and then even the technical support at 1.1545. So risk off on euro dollar, lower we go. The same situation is on the British pound. Risk off, we are testing yesterday's low 1.3313. Any breakout lower is bearish, and we should see lower levels quite soon with this kind of a negative momentum on daily time frame chart, and the fact that we are below the 100 periods moving average, and we are invalidating the yesterday's very nice candle here with the long down shadow. The next target was hit 1.33 and 10. Next target 1.3276, then 1.3214, 1.3190, eventually 1.3120. 22. So there's plenty of the levels to the upside. Nevertheless, none of them is strong enough. Our analysis related to the rejection of the trend line was spot on. The market continues to slide lower. US dollar versus the Japanese yen is consolidating right at the level of 157.31, the previous technical resistance, after the new swing high was made at 157.76. Any breakout above this level would continue the rise of the US dollar versus the Japanese yen towards the technical resistance, and a swing high of this rally located at 159.44, almost 100, and not that far away from 160. So please keep an eye on the US dollar versus the Japanese yen. It looks like there's a major flow towards the US dollar. Let's confirm with US dollar index, and you can see the US dollar index after a short period of the consolidation is rallying very strongly into the extremely overbought conditions on a 4-hour time frame chart. 98.93 is the recent level that we hit here. On a daily time frame chart, we almost erased all of this slump at the end of the January. Next target on the daily time frame chart is located at 99.46, and this is the technical resistance. If we look a little bit further, we got very strong technical resistance at 100.33. Let me just mark it by using the horizontal line. Very strong horizontal line. So this one here, and you can see that this is very serious technical serious technical resistance. So any breakout above 100.33 opens the road towards the swing high from the May 2025 at 101.95. so the major inflows towards the US dollar is happening right now. What is gold doing in that situation? Gold hit the level of 5,418 and it stabilized, and it's a little bit of a pause we have on the rally. We are very close to the level of 5,594, the swing high, all-time high, and the previous impulsive wave to the upside high as well. Now the situation is a little bit calmer, a little bit of the profit taking, a little bit of the consolidation here. Nevertheless, the outlook remains bullish on gold whatsoever. Now S&P 500 is erased all of this yesterday's gains, very close to the yesterday low, 6,758. Any breakout lower opens the road towards the swing low from the February 6th. This is 6,727 or even 6,715. So please keep an eye on this current situation on S&P 500. It looks like we might have a breakout, and it looks like we might have a breakout to the downside. This is confirmed when the level of 6,716 is clearly violated. So we will have new local low made on the S&P 500 if this level is violated. Crude oil keeps rallying. Yesterday we've seen a spike towards $75 per barrel. Today the price of the crude oil is still moving higher towards the yesterday's high. For now we got 74.10, but the bullish pressure is quite strong, and it doesn't actually end here. We got the new technical support located at the Friday close and the monthly close, 67.18 as the technical support. We have a gap up, and now the crude oil is trying to rally way higher. Please notice that the ultimate target which is visible on a daily time frame chart is located at the level here, 77.64 or even 80.76. Please notice that we hit extremely overbought conditions. Nevertheless, in current situation we might see more movement to the upside, more trending to the upside, even despite the fact that current conditions are extremely overbought. One more thing we can add here, I don't know if we will be able to do it. Let me just flatten the screen for now. Is that if we are able to place the trend line here, and if we manage to place it like this, as you can see, we hit this trend line here, we hit it for the second time, third time, fourth time, then rejected, and we tested the lows at 55. Then we have a movement to the upside above the 100 periods moving average. Now we just broke above this trend line yet again. So let me just go back to towards this situation here. We are above this trend line. This is huge. This is very huge situation here. If the test was positive and we shall rally towards 77.46, the outlook remains very bullish for the crude oil. And the last but not least, the Bitcoin. After yesterday, very nice bounce to the upside and the test, or a brief test of the level of 70,000. This situation was rejected. One of movement to the upside, A, B, C, three ways up is always corrective. So now we have a profit taking situation. Momentum wise, we are still above the level of 55 points right now. Not that strong, nevertheless it's still positive, and there is a chance that the market will hit the supply zone sooner or later. Let me just move this situation a little bit further in time. So we got this supply zone roughly around here. Okay, let me just, oh, there you go. And now this is our level for the supply zone. Yes, so there is still a chance that with that kind of a spike up, we will hit this zone. Nevertheless, now pullback profit taking is taking place, 67,917. Any breakout below the level of 50 is bearish for the Bitcoin. Bitcoin is back into the consolidation. That situation, only a sustained breakout above the supply zone would change the outlook to more bullish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.